Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you one dividend at a time. With the market still full of uncertainty, savvy investors know that opportunities hide in plain sight, especially when it comes to dividend stocks. In today's video, we're diving into 3 high-quality UK dividend stocks that are trading at a discount right now. Whether you're looking to boost your passive income or scoop up long-term value plays, these picks could be just what your portfolio needs. The first stock is none other than BP, stock ticker BP. This is a British multinational oil and gas company. BP operates across the entire energy value chain, including oil and gas exploration, production, refining and marketing. The company has been undergoing strategic shifts, including asset sales and a reevaluation of its investment in low carbon energy. Notably, BP has initiated the sale of its Castrol lubricants business as part of a $20 billion de-investment plan aimed at boosting its share price. Some key stats to do with BP: they are currently £3.56, based in the UK, part of the energy industry, have a market cap at 55.66 billion. Went public in 1979, currently have a 3-year dividend growth streak and a 3-year dividend average growth rate at 10.69%, with a very big yield currently sitting at 6.75%. We can see from the graph that over the last 12 months, this stock is down over 20%, which is why I've included it in today's video, as I believe there is some value to be had. From the graph, we can see how it is down over 20% in the last 3 months, which is a substantial drop in price, hence why I think it could be a good stock to add to your portfolio right now. BP's share price has experienced a noticeable decline in 2025, influenced by several different factors. First off is the falling oil prices. Crude oil is now under $60 a barrel, which impacts BP's profitability. Another factor is their recent strategic shift. BP has pivoted from its previous green energy initiatives to refocus on oil and gas investments. This abrupt change has led to shareholder dissatisfaction, with a significant percentage voting against the re-election of the chairman, and their financial performance and debt levels. Recently, the companies reported a substantial drop in net profits and an increase in net debt, raising concerns about its financial stability. Despite these challenges, BP may present a value opportunity for certain investors. As I know a lot of you prefer the higher yielding UK dividend stocks, that's what I've tried to focus on more in today's video. And BP is no exception, with them offering a dividend yield currently at over 6.7%. As well as this, most analysts maintain a positive outlook on BP, with price targets suggesting potential upside that I will highlight from the Wall Street forecasts later in the video. And finally, although some shareholders were unhappy with the recent strategic realignment, the company's renewed focus on core oil and gas operations may enhance profitability in the long term, and that is the most important thing to focus on as a long-term dividend investor. We want the companies that we are buying to be looking into the long term and planning for the future. As you can see on screen, like I just mentioned, the 12-month Wall Street estimate prices are actually at the lowest case at £3.63, which is a 2% upside on the current price. The average case being £4.47, which is a 26% upside on the current price. And on the highest forecast, they believe it could be worth £6.82, which would be a massive 92% upside on the current price. Not only this, but their intrinsic value, when plugging in my numbers, was massively undervalued at 75% undervaluation, meaning that the stock is actually worth around £14.15 on the base case intrinsic value scenario. BP may be a strong buy right now for value and income focused investors. Despite recent share price pressures from falling oil prices, strategic shifts and weaker earnings, the stock offers a high dividend yield and is trading at a discount relative to its historical valuation. For investors willing to ride out near-term volatility, BP presents a solid opportunity for long-term gains and consistent income. Let's have a look at the next stock. The next one on our list is Legal & General, stock ticker LGEN. This is a prominent British financial services company specialising in life insurance, pensions and asset management. It's listed on the London Stock Exchange and is part of the FTSE 100, and it holds a significant position in the UK financial sector. The company plans to return over $5 billion to shareholders over the next 3 years through dividends and share buybacks, and proceeds from the sale of its US life assurance business. If we have a closer look at Legal & General, we can see that their current price is £2.37. They are part of the financials industry, have a market cap at £13.72 billion, went public back in 1979 and currently have a dividend growth streak at 9 years with a 3-year dividend growth rate at 5%, and they have that massive dividend yield that currently sits at 8.93%. From the graph, we can see that over the last 12 months, the stock is actually down 3.47%, and this stock was actually included in my May buy video, and since then the share price has dropped slightly further, so that is why I have decided to include it in today's video as well. The price has actually been falling since 2022, and over the last 10 years the stock is flat. So does this show no growth within the stock or a good opportunity? Legal & General is in a very competitive business, and the insurance sector needs a very long time horizon as it can be very volatile with plenty of short-term ups and downs. With this sector, you always have strong economic pressure, and we've certainly seen plenty of that in recent weeks. I do still expect plenty more to come, so the share price could be in for a rocky ride over the short term, but it is a sector that I really do like long term, and Legal & General presents a strong case. Under CEO Antonio Simos, Legal & General is undergoing a strategic shift to streamline operations and focus on core areas such as pensions, asset management and insurance. Additionally, Legal & General plans to handle 50 to 65 billion in pension deals in the UK by 2028, increasing its previous target, showing great overall growth within the company. If we have a closer look at their 12-month Wall Street estimates, we can see they believe on the lowest forecast there is actually a 9% downside on the current price, so it will be worth £2.17. But on that average case forecast, they believe it will be 11% upside, being worth £2.65. And on the highest forecast over the next 12 months, they believe Legal & General could be worth £3.51, which would be a 47% upside on the current price. As well as this, when plugging in my numbers for their intrinsic value, it also comes out at being undervalued by 30%, being valued at £3.41. And I think that Legal & General presents a compelling case for investors seeking high dividend income and potential capital gains. The company's strategic restructuring under new leadership aims to enhance operational efficiency and focus on growth areas. However, as a potential investor, you need to consider the sustainability of its dividend payouts and the company's sensitivity to market conditions. Personally, I believe around that £2.20 mark is a buy price for me, so I'll likely be holding on till it's close to that price, but it is already one in my portfolio, and it is one that I hope to add to in the near future. The final stock we are going to be looking at in today's video as a good buy for June 2025 is Imperial Brands, stock ticker IMB. Imperial Brands is a British multinational tobacco and nicotine product, and it ranks as the world's 4th largest international cigarette company by market share. They not only invest in cigarettes now, but have ventured out into many other different types of categories, as you can see on screen, and we can also see their price on screen right now. You can see how much it has increased over the last few years, but has had a steady drop in the last month. If we have a closer look at the stock, we can see the current price is actually at £28.16. They are part of the consumer staples industry, have a market cap of £23.07 billion. They did go public back in 1996 and currently have a 3-year dividend growth streak with a very tasty 3-year dividend growth rate at 15.65% and a massive dividend yield also sitting at 6.7%. Like I mentioned, over the last month, they have had a big drop in price, being down 6.7%. 0.75%, and I think this stock could be a good buy for June 2025. Imperial Brands reported strong financial results in the first half of 2025, with tobacco prices gaining offsetting volume declines. The company remains on track to meet its full year guidance, supported by continued momentum in next generation products. The company has initiated an evergreen share buyback program, committing to annual repurchases over the next 5 years. This strategy aims to enhance shareholder value by reducing share count and returning surplus capital. Imperial Brands is concentrating investments in its 5 largest markets in the US, Germany, the UK, Spain, and Australia. These markets account for approximately 70% of the company's adjusted operating profit, providing a stable foundation for growth. This is very promising signs for us long-term focused investors. Finally, the company is actively investing in next-generation products such as vapes and heated tobacco, aligning with consumer trends towards potentially less harmful alternatives. This strategic shift supports long-term sustainability and addresses evolving regulatory landscapes. If we have a closer look at their 12-month Wall Street estimate, we can see on the lowest forecast, they do actually believe it could have around a 25% downside, being valued at £21.21, but on the average case seeing a 12% upside, being valued at £31.48, and on the highest forecast being valued at £37.80, which would be a 34% upside on the current price. Not only this, but their intrinsic value also shows a 27% undervaluation, being valued at £38.48 when plugging in my numbers. While Imperial Brands has demonstrated resilience, investors should be mindful of the potential risk, including regulatory changes, shifts in consumer preferences, and leadership transitions. However, the company's proactive strategies and solid financial footing positions it well to navigate these challenges. In summary, Imperial Brands' strong dividend yield, strategic market focus, and commitment to shareholders' returns makes it an attractive option for investors seeking stable income and potential value appreciation. And that wraps up our look at 3 discounted UK dividend stocks to keep on your radar this June. I continue to try and seek value with higher yielding UK stocks on a month-to-month basis, so if you found any value in today's picks, don't forget to like, subscribe, and hit the bell notification so you never miss another opportunity to grow your portfolio. Let me know in the comments which of these stocks do you think has the most upside potential, or did I miss any of your own favorite stocks that you've been looking at in the past few months. Thanks for watching. As always, invest smart, stay patient, and I'll see you in the next one. For now, this is the Geordie Pig Investor, over and out.